wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello, everyone. Good afternoon. I'm Louis Lau here. I'm the M Plus from the M Plus Online. We are going to talk about the M Plus Wiz highlights for today. I think today's market has been quite negative. This is due to the recent situation whereby the US and also Europe are likely to have this embargo, which means ban on the Russian oil. Russian oil, if banned, that could actually spur a lot of supply disruptions in the market situation, and that's why you can see the oil has been exponentially jumping from 101 to 105 to 115, and this morning it jumped up from 123 towards the highest point was around 138. So right now people are actually worried about when there is war and there is a ban in all this thing, it might trigger all this exponential move. But one thing we can take note is it is also not actually improving in our market sentiment. Despite we are an oil exporter, we are also suffering from this situation here. So but one thing we know that when oil price is going up higher and higher, definitely the E&P, the exploration and production companies such as Hibiscus will play a very big role in the energy sector. But the rest of the companies such as Dayang, Charimin, those are support and services companies. So those are the companies that need contracts. So once they need contracts, only that will translate to their earnings. So most likely the beneficiary definitely is the E&P companies, exploration and production. So under this scenario, Hibiscus has been performing quite well. So other than that, we also notice wheat has been going up higher with futures. If you can look at wheat futures, I think they have continued to limit up position. I think every day they have been limit up. So in this scenario, we also thought that could actually bring up the CPO prices, because CPO prices is also related within the agricultural commodities. So in this Ukraine-Russia tension, when they are having all this geopolitical tension, one part of the disruption is the sunflower oil. Sunflower oil normally is edible oil, and India is also trying to buy, but there could be disruptions coming in. So that's why CPO prices has been being pushed higher. So that is why since the start of the war, I think mid to end February, it has exponentially go up from 5,006 to 6,000 to near towards 7,100 level, and then it started to correct back to 6,400. So I'm saying that with all this situation that is happening in the world, or as long as there's geopolitical tension, definitely this will actually impact in terms of the edible oil, and these CPO prices will be able to stay strongly and firmly above this 6,000 level. So but CPO prices has not being um, CPO prices up today, but the share price has been going down for most of the companies, but only a handful of them are actually up today. So I'm just bringing you the highlights for under this geopolitical tension, and what is the things that has been rallying, what are the commodities that has been running. So the other than that, aluminum futures is also rising. I can just show you briefly, but this will only benefit maybe p metal. Other than that, will be using aluminum as the raw material to produce aluminum products, but p metal will be producing aluminum itself, and that should benefit them. And other than that, you may also check out gold prices. So gold prices normally is part and parcel of a safe haven asset, and when there is a geopolitical tension or war or related tensions that came up, that should bring the oil the gold prices higher. So at this juncture, it has certainly broken the trend line, and therefore we are seeing the very strong exponential move even higher towards near the 2000 level. Okay, 2000 level will be crucial. Once it is able to surpass that level, I think more or less we can actually anticipate the gold related companies in Malaysia will benefit as well. Okay, so these are some of the commodity related trading. I think this year itself, it will be commodity trading year. And but one thing we have to take note is also when all these are rising, what is also rising in tandem? It is the inflation. So inflationary risks may come in to hit the earnings of most of the corporates, and corporates earnings might go lower in this under this environment. Okay, so let's go back to our trading platform. Let's see um, what is good within our uh, local exchange. Let me share one screen. Okay, if you can view my trading platform, this screen, please put in Y or yes into the comment section. And oh yeah, don't forget to also share this video out, and make sure you have the sharer badge later on. Once you have a sharer badge, and if you want to ask about your stocks or your portfolio, what are the counters that you are interested in, please also share this video out, because once you have the sharer badge, then we will be able to take your questions, and also like this video. And going forward, we will have more contents going forward for all of the public viewers. Okay, so so if you can see my screen, I'm showing the indices performance for today. You can see that the massive selling was seen in the technology stocks. You can see that it is down by 5%. And the next is healthcare related counters, then followed by financial services, consumer products, property. I think all of these are actually fear and concern about the war. Once it is crossing a certain amount of period, that will dampen that will increase in terms of shipping fee, shipping disruptions. They are afraid of their raw material will be much higher in terms of their costing. So therefore healthcare stocks are being sold down. Financial service is fearful about when there is war, there is a disruption in economy. Financial services might be impacted, and consumer products same as well. They are also afraid of the inflationary pressure. So that's why the whole market sentiment is negative. But few things here that actually people are taking note of that is not so fearful in selling down, such as plantation, REITs, energy, and also construction sector, and also industrial products and services. So I believe that because there could be people that might look out for the plantation, because plantation CPO prices has been going up, but it has not been breaking new highs, and therefore plantation counters, handful of them are actually in the positive region. Some plantation, I understand why they are in the positive, because they definitely will benefit under this scenario, because they have a biggest plantation in terms of hectare, and also their yield are much better if they can sell more, which means that it's better for them. So that's why they are in a positive region. And the next, I think it's energy. Energy is also because of hibiscus is pushing it higher. Dilium, Charimid, Usma, Panergy, those are some of the companies that the names are very familiar to you, and those are trading higher. So it's also quite a handful of them. I think seven companies only went up for oil energy sector out of 25 companies. So I think about near to or more than 25%. Okay. But I think the first beneficiary definitely it will be hibiscus. Okay, hibiscus is selling oil. You know, drilling up the oil and selling up the oil is the most profitable as of this juncture. But if you're talking about the rest of the players, make sure they have a net cash position. So I think Dilium, Charmin, those are the ones that have net cash. So I think people are buying those net cash company under this scenario. If this situation were to continue, were to persist, were to prolong, then it will benefit those who has cash. Okay, so cash is king. I think it really matters at this current point of time. So other than that, REIT is also dropping very little, and I think people are looking at just because REITs are basically domestic stuff. They are not really into. They're very defensive. You can see that although they are dropping, they are maybe dropping around 2 cents, 2 cents, 1.5, 1 cent. So basically, they didn't drop too much in terms of their value. So it is still quite steady for REITs. I believe that REITs will also need a lot of effort from the reopening activities. And if the reopening of activities can translate to more tourists coming into Malaysia, the opening up of the borders and things like that, then we are having some good opportunities to pick up some REITs for defensive plays, especially when REITs they are having quite a good number of dividend. If we put in a dividend yield, I think it's very attractive to say that they have sort of near to 8% dividend for certain companies. I would say that Central, KFP, UOF, REIT, all these are having 7% and above. So dividends are still quite decent. So you can actually monitor on these companies to play around with. If you want to have some defensive exposure, those are the places that you can look out for. But other than that, why industrial products are also dropping just less than 1%. I think perhaps some of the companies are still under oil and gas related, such as PCAM, PMB Tech, Ferrosilicon, OMH is under Ferrosilicon as well, Pentec under the oil and gas sector. MSC is also the product is tin, if I'm not mistaken, tin or lead. Okay. Yeah, KSSC is also something related to metal. All these are part and parcel of building materials or commodities. Okay, so those are actually gaining traction. So they are trying to offset the downward pressure by the rest of the 156 companies out there. Okay, so PCAM definitely will benefit under the Petronas, KPAC, and things like that. PMB Tech and OMH is under the ferrosilicon. Is I think Russia contributes around 8% of ferrosilicon in the world, and therefore there could be disruption, and that is why that could actually prompt the shares the underlying prices higher for their products. Okay, so that is just an overview of what has happened in the market today, and it is not really good if you look into um, the gainers in the stock market, hibiscus. Most likely, you will see a lot of HSI put warrants Pokong and Tomei is under gold. So these are the two benefit. Sign Foundation, like I said earlier on, benefit under the uh, higher CPO prices. I think Delium has a very good chance because announced they just announced their um, dividend. I think about a week ago or 2 weeks ago, and yeah, second interim dividend of 1.2 cents. So that could be why they are still on the rise, perhaps. And then their earnings are also improved quite a lot. So that could be the case. Other than that, we see Cocoland. This is part and parcel of consumer stocks, building materials. Yeah, very less, companies in it, but most of them are actually warrants, call warrants or put warrants for the other underlying shares. Other than that, Hardybook is good for defensive play. KSL under property sector. Yep. So that is the whole market condition right now. Okay, so not much in play except for the commodities related like gold, metal related, oil and gas, plantation. Yeah. So these are some of the sectors that you can actually look out for. But we didn't thought that it will be so severe until this situation whereby if we go into our daily picks, we still put in some safe haven asset, and we thought that the commodity related companies should actually perform, but it actually didn't perform too well down. After a few minutes or few uh, hours of trading. Let's move into our daily picks right now. I'll share you another screen. So this screen will tell you what stocks we have mentioned today. We thought CPO price can rebound in tandem with the oil prices, so that's why we put in Hanlon and also put in MBL. Okay, MBL didn't give us a trigger; it continued to pull back further. Hanlon give us a signal in the morning, and also it pulled back later stage, so it has triggered near to 97 cents. Right now, it's around 92, 93 cents. So it's sort of a pullback consolidation mode. If you look in the daily chart, I think it's not as decent as before, but still it is elevated still at the near towards the upper region of the stock prices recently. We need to see more clarity in what the CPO price can go up until. But as long as it is going up higher and higher, it is also not good for the demand as well. Because when your prices is so much higher compared to the earlier days, they might not continue to import CPO going forward. So that is why people are also fearful of the demand destruction level. Right now it's at 6,004 to 6,600 level. It is almost more than double of what you are paying 1 year ago. So people might be cautiously buying. They're not buying a lot, but at least it is not a full force into buying mode unless other edible oils are such as sunflower oil and all those soy oil are actually not performing, or also having some disruption, then it will also prompt buyers to import more of CPO if there are more disruption in the other oil products. Okay, but at the end of the day, if everything is high and they have to buy, they have to buy. Okay, so that will become um, more pressure for them, because if they're buying at a higher price, they need to sell to the consumer. So consumer, if they feel the pinch, they might buy lesser, and lesser going forward. But it is still a necessity. So I would say that it will be compensated by the price, but consumer will face a very tough situation when food inflation comes in the second half of this year. I think that is a main topic for that particular team will really emerge, in second half of this year, because food inflation is definitely one thing that people will focus on. Okay, so other than that, we also put in some matter related like income tax, because I do understand that they are doing quite well, doing during uh, they should be doing quite well under this scenario, when if there is a disruption, like for instance, I think last year few years ago, they are not really doing good, but recently they are doing much better because they can sell much more in terms of their products in to China, to various parts of the world, and demand are high, and their prices, because of the disruption, shipping delays and disruption, the prices of the products are actually higher. So I think that has came to a point whereby they have turned into a much better position, and right now, you can see that volume has been picking up. So I wouldn't say this is losing counter yet, because this morning it has been up, and right now it's just flat, and the lowest point is at 68.5. So I think there is still a very good chance that this should continue higher. And when we see this disruption and prices goes up, China prices also go up as well. In terms of the steel prices. So that should uh, see some fall suit in Angtex and also Presta. So Presta is also same industry, metal related, but this is not as as lucky as Ingtex. It has came into a negative position after it triggered, I think, 72.5, 73 cents. It went up towards 74 cents before returning to 70.5 cents. Okay. So I still think that, matter related under this scenario will still continue to benefit in terms of their sentiment, should trade higher. So other than that, we have put in also Miko, we have put in also TSH. Yep. So these are three of the companies that we put in under the foundation, and also we have put in building materials too. And Miko is under the furniture, but didn't trigger. And the last one is Tome. Tome is because we think gold prices will continue to shoot up higher if this prolongs. And there is a breakout to this morning around 115, 116, traded towards 119 before ending around 116 just now 12:30. Okay, so these are the ideas behind why do we put in all this, and there could be further, continuation pattern. But most of them are actually in the uptrend intact position. So therefore, the risk of uptrend will be, I mean, those risks in the uptrend position will be lesser. Okay, the impact of sell down might be lesser as compared to, those that are in the downtrend position. Okay, so that is our way of doing things. We select counters that is uptrend intact position, and you need to trade within uptrend position, and you have to put a cut loss point. But comparing uptrend versus downtrend has a risk of selling even lower, but uptrend at least it will go into a consolidation phase rather than collapse in next few days or few weeks, unless those are the dodgy counters. So those are counters that we put in. Definitely we have screen through it based on their fundamentals, based on their chart patterns, and that's why we have put in. Okay, so this is the idea behind it. So moving forward, how should we position ourselves in this scenario? I think if you are still not into the oil and gas counters, you may want to try hibiscus, but definitely the risk is much higher, okay, as compared to much earlier on. So right now is at 135. Let's see um what is the earlier range of trading. So in 2018 it is around the same range as well. Let me Yep, 2018 is around the same range. So right now, which is back to the same range. But if you look into the earlier position, it has went up to 2 ringgit and 60 cents during 2014. So that is the range that people might be anticipating. Okay, people might be anticipating around the 2 ringgit 60 cents range. If this prolong, and because right now it's near towards 120, 140, which is the price during 2013, 2014. Okay, so if you take note of this, that could be the range, or that could be the target that people might be eyeing on. Okay, other than that, you also can check, Delium, because the pattern is still uptrend. Yeah, pattern is uptrend. Recently, there is a very strong volume building up, and uptrend in tech position has been seen, and consolidation phase with some dividends. So I guess there is some cash in hand that people might be attracted with on this dilem, and hopefully that it can continue to retest the 69 cents zone for dilem. Okay, so I guess that will be on the review side on what are the stocks that people can tap along with at this current point of time, and not many of them because right now I think 80% of the stocks are in a downtrend position, especially in the tech counters. They are impacted by two things. One is the disruption in terms of their sourcing of raw materials going forward. Russia and Ukraine has some portion, some good stakes in terms of their raw material, and going forward, it is very likely people might have shortages in terms of the raw material. So it depends on how long this war will proceed, but definitely it's not looking as great as few days, but at least we are looking at maybe weeks until months, because I think things are not resolving as what we anticipated or expected. Okay, so maybe right now I will just take some questions from those that have shared the video. So if just in case you have not shared a video, please make sure you have shared, and you have a sharer badge on top of your name. And when you ask a question, then we'll pick up from there. Okay. So let's see on some of the counters. TA for AYS and Opcom. Okay, AYS, I think it's under the metal related as well, but they are not looking as great. Right now, it seems like there are more downside risks towards this AYS if we just remove the support resistance. Yep. So it is uptrend and consolidation right now. It is still considered as a consolidation mode or mid-term uptrend move, but after it has crossed below this SMA 200 level, it is not looking as great as before. It might continue to consolidate near towards 51 and 56 cents level. At this point of time, I don't see some revive in trading opportunities yet. If it is falling below this 45 cents, it is looking even worse and may cover the gap back to that maybe 38 cents. Okay, so there are two levels that you have to monitor, 51 and 45. And if these two levels are broken, next target will be around 38 cents. Okay, Opcom related to telco side, it has been positive earlier on, but right now it is back to the SMA 200 level, near towards the 82.5 cents level. So I guess right now it's still negative. We have to wait for a good rebound move, but right now it seems like there is no signs of recovering yet. Although 5G related news has been coming out in the media, but it has not been getting traction in terms of the share price. Okay, share price in Opcom. So overall, I say that this is still in a consolidation phase or correction phase, and we need to see what is happening around the 83 cents going forward. Right now, it's still not as positive, so I think it is you need to wait for the rebound to happen. So I think Opcom, if it is breaking below the 83 cents, then we have to really cut loss. Yeah. Ulicorp. Yeah, Ulicorp is also same thing here. It has fallen below the SMA 200. It's not looking as great. Most of the things are negative if it is below SMA 200. So it has hit around 145, break below 128. I think next target will be around the 1 ring and 20 cents. But if it is not able to support around 1 ring and 20 cents, I think there might be further downside risk towards the 1 ringgit level. Okay, for Ulicorp. I think mainly is due to perhaps the disruption in terms of the shipping, the fear of unable to produce their products and sell as fast. Okay. Other than that, Resin Tech recently has made a breakout and traded higher, still within an uptrend in tech move, still above the moving average of 50. This is looking slightly uh, still positive, but it is in a consolidation phase. So we need to check whether is it still maintaining the view of uptrend move, unless this is breaking below the this level here, the 89.5 cents, then we might further see further downside risk towards that. This could be taken also as two double top formation as well. So at this point of time, it is still uptrend. Uh, Consolidation phase. But if this two is going to break certain neckline, I would say that the neckline, I would put the trend line here, 89.5. If it's falling below 89.5, then this might, continue to go down further. So at this point in time, I think you need not to be too risky, too aggressive on entering the counter, but you can actually wait for what is happening along the 96 cents first. If it is still falling below 96 cents, then you wait for the 89.5, then only you return in action to trade higher. Okay, for now, I think we shall avoid resting neck. Yeah, so for technology stocks, let's check the charts here. Um, Based on this pullback early on, it is around 18 to 20%. This is 21% towards the previous low, but it breaks even lower, and right now it's continuing towards the 33% fall already. So where is the next potential target that you can actually accumulate? I think you may want to look at say for instance this level, maybe 60.94. That would be a very strong resistance that you can actually look out for. Perhaps that is around another 10% drop. Okay, so right now it's still quite negative. I would say that negative trend has been continuing, and it has not been stopping yet. Okay, it has not been stopping yet. So there could be more downside risk to all this, technology stocks. Let's say some people ask about MyEG. What is this? What is the stand? What is your view on this MyEG? I think if it is below SMA 200, try not to go too aggressive on them. Try to wait for some good rebound near towards, say for instance, these two levels I am monitoring will be 87, 88 cents level, and also 80 cents level. So these two levels I'm going to monitor to see whether is there any follow through rebound buying opportunity. Right now it's still quite negative. The negative momentum just pick up, and resistance is definitely quite stiff around the 96 cents level. Okay. And other than that, people ask about DNEX. I think DNEX people have been treating this not as an oil and gas company, but more towards the technology stocks. Okay, so it has been falling, and it has been falling quite steeply after it is just staging a sideways move around 1 ring at 13 cents. It might continue the pullback phase towards the SMA 200, which is near towards 81 cents level, 81.5, because they are more towards tech instead of oil going forward. So people will factor in that, and also will sell technology stocks. Once technology stocks has stopped bleeding in terms of the sentiment, then we may see potential upside move to it. Okay. All right. Let's move on to a few more segments. I think people ask about steel counters. I think steel counters, depending on whether they are, producing steel related products, and there is still demand. Demand side, I think it has been on a falling trend due to the crackdown in property in property segment in China. So China wise is not increasing in terms of their demand, and therefore that will impact the the sales for most of these steel companies. So that's why you can see steel companies are rallying, but they are not rallying very strongly, because this is just a sentiment play and not a demand factor for now. Okay, for MSC, I think it's still uptrend move. The tin prices, the lead prices are still quite strong. So 5 ringgit and 45 cents is the resistance. You can use this as to buy on the breakout, but make sure that you have your cut loss position intact. Like for instance, this is if you are trading at this range 545, 515, then you have to wait for a breakout. If the trend turns against you below 515, then you have to cut. Okay, so this is the idea here. So make sure you trail up your profits because it has been quite extended in terms of their trading recently. So if you're already in, trail up your profits. If you're not in, then you have to put a cut loss point at 5 ringgit and 15 cents. Okay. Review on FA about Tambun and Gadang. I think I don't have um, the coverage. We don't have the coverage on these two companies, but just briefly go through what is their recent results. Let's see. So let's check the announcement. So they are still in the profitable range. Recently, they are having a very good, strong revenue. Their profit also increased as well. Therefore, I think they are trading in a positive region, I would say. But at the same time, you also need to be worried about the liquidity issue because it is not as liquid, okay, liquid as compared to other companies such as EcoWorld and SB Satya. So that's why you can see a lot of spread and wide gaps here and there. At this current moment, it is still considered as uptrend mode, uptrend consolidation phase. But the negative momentum is picking up. Therefore, upside range will be limited for now towards 80.5. Support is at 74 cents level. Okay, I'll take the last question, Gadang, and we'll close this session and we'll see you again in next week. But this counter here, let's check the fundamental side of things before we go into the technical. Okay, yeah, they are still in the positive region. The recently January result was still in the green. Second quarter result. So all in all, it is still having a 40.8 million of 40.8 million of cumulative profit first half for this financial year. So we should be. I mean, it is still positive, but sentiment wise, it's not as great for now on the construction sector. So I think it is still not able to churn higher in terms of their share price. Currently, I think 36 cents should be their support range. Next support will be around 34.5. Negative momentum is still there, so I would expect consolidation fees to persist below this SMA 200, which is trading range should be around 34.5, 37.5. But if it is able to break out the 37.5, you also have to be worried that it is not able to break out above 40.5 cents level. So this is likely to be a rebound play, and rebound will hit resistance along 40.5 cents, and it will pull back. It is likely to pull back from that point. Okay, so it is still quite tough for construction sector. If you look into the construction index, it is still below the SMA 200. So it is not ripe yet for the uptrend position to come in. Okay, so I guess that will be it. Going forward, for this week, I think it will be very challenging, as in the war. If the war is still persisting, that will actually affect the sentiment overall, because there will be disruption in terms of whatever it is, shipping, be it the aviation, be it the oil price is higher, and all this inflation will kicks into the position of the corporate earnings, and that will dampen the earnings. Dampening the earnings will also translate to softer, uh, market sentiment. So that is why people will be afraid. But at the same time, you also have some good opportunities within the oil and gas sector, such as hibiscus, dillium. For gold sector, you can actually, or gold related proxy, you can look into Tommy, you can look into Pokong. I think that will be it for now. Yep. So at this point of time, people will look at what are disrupted and what disruption will provide which sectors into benefiting. So these are the things that people will think about, and you have your mindset. You have to train into that path in order for you to find some good stock picks. So for now, I think commodities definitely can't go wrong. So yeah, so that will be it for this session, and thank you for the time today, and we will meet you again next week. Thank you so much, and hopefully that you can find some good opportunities in the market out there. Thank you and see you again. Bye bye.